Welcome everyone to Cost Accounting 2. And as we said earlier, that this course is the continuation of the course that you took in semester 1, Cost Accounting 1. Of course, as we can see, we are going to start with chapter number 5, talking about activity-based costing, or discussing activity-based costing. But before entering or starting this chapter, we need to recall some of the terms and concepts that we have encountered and discussed in Cost Accounting 1. First of all, let us define what do we mean by cost accounting. So what is the definition, or who can tell me what is the definition of cost accounting? Or what is this term, or what does this term means to you?
Cost accounting is an accounting branch that's related to how the company will plan its cost or reduce the cost, but it will keep try to keep at the same level of quality.
Excellent, excellent. This is one of the main goals of cost accounting.
Cost accounting is a cost object that can be used to trace the cost directly or indirectly.
Excellent. One of the processes. Anyone else? Therefore, we can all say that cost accounting, first of all, is an information system. Right? And any information system have 3, or let us say 4 different components. What are the components of any information system? Who can tell me?
Input, output, process.
Excellent. Therefore, we have input, process, and at last, output. And of course, we have the negative feedback. So, who can tell me what is the meaning, or let us say, what are the components of the first component, which is input? What are the inputs of any cost accounting information system?
Information resources.
What do you mean by information resources?
Data, documents.
We are talking about what are the types of data. Of course, this data could be from source documents. You are correct. Financial reports. Financial reports represent what? Financial data. Correct? Therefore, the inputs of any cost accounting information, as we said and defined cost accounting earlier in semester 1, is considered or is concerned with financial data as well as non-financial data. And when we discussed this point, we said that this is the difference, or this is among one of the differences between financial accounting and cost accounting. That means that cost accounting focuses or analyzes or measures or processes financial as well as non-financial data, while as financial accounting only processes financial data or financial transactions, as you took in Accounting Principles 1. Therefore, after the inputs, we have these financial data, we have these non-financial data. What are the different processes or applications that are done within the cost accounting information system?
Analyzing this financial data.
Excellent. Analysis. What else? Recognition or measurement, let us say. Excellent. What else? Classification. Therefore, this financial data, this non-financial data that are the inputs of the cost accounting information system is measured, analyzed, and classified in order to produce the output. What are the outputs of any cost accounting information system? Financial statements. Are these the output of cost accounting or financial accounting? Financial accounting. And we are talking here about cost accounting, not financial accounting. Therefore, we need to know now what are the outputs of cost accounting, not financial accounting. As we said, financial accounting, the main purpose, or let us say the main output of any financial accounting information system is the presentation of financial statements. But here in cost accounting,
procedures or decisions that make the inputs or the process implementation.
excellent, excellent. فبالتالي the output of any cost accounting information systems are reports. Different reports. They are not only financial reports, because we said that the focus here is on financial and non-financial data. Therefore, the output of any cost accounting information system are different reports. Reports that benefit whom exactly? Excellent. One of the users, managers. Only decision makers. Who are the decision makers in this case? If we are talking about from the perspective of a cost accounting information system. Only managers? Shareholders. So what do you think about shareholders? Accountants. Who else? Here, financial managers and so on are all under the term managers. Creditors, governments, and so on, you are, let us say, focusing upon financial accounting in this case. When you say that shareholders need this information, this is incorrect. Shareholders need financial, let us say, statements that are the product or that are the outputs of the financial accounting information system. When we say creditors, when we say managers also, of course, when we say governments, tax authorities, and so on, these are the people, or let us say the segments that use financial statements, not the reports and statements produced by cost accounting. Because as we said earlier, in Cost Accounting 1, there is a difference between financial accounting and cost accounting, or management accounting, as we said. Financial accounting produces reports, produces data for whom? For external users. While as management and cost accounting produces reports for whom? For internal users. Therefore, the focus of these reports with financial and non-financial data focuses upon only managers. Only managers. Why? Because this data is concerned only for internal users. Is that correct? That only the use of cost accounting reports is for the management accounting, is for managers to make their decisions, to help managers make their decisions, or is there another purpose for cost accounting information reports or output? What do you think? Type. Let me give you a question. Think of this question and then answer if we need another, or if reports or data or information from the cost accounting information system is used in or by other people or other users. Let us say, or let me rephrase this question, how do we evaluate the inventory? And the inventory evaluation or the presentation of inventory is presented in what? In what report? How do we evaluate, or who does the evaluation of inventory? Of course, the evaluation of inventory is one of the tasks of cost accounting, right? طيب, this cost of inventory is presented where? In the balance sheet, which is
Assets.
which is presented in the financial statement, correct? Therefore, not only we need these reports, not only we need this information, financial or non-financial, for the use of managers in making their decisions, but also we need them for the preparation of financial accounting or financial statements, sorry. Therefore, another purpose is the preparation of financial statements. Therefore, as we said in Cost Accounting 1, the purpose here, or the purpose or cost accounting information systems benefit both management accounting. That means that the users of this information are managers to help them make their own decisions, to help them in the decision-making process, as well as it helps financial accountants prepare financial statements. Therefore, it also helps the other branch of accounting, which is financial accounting. Therefore, cost accounting, as we said in Cost Accounting 1, helps managers make decisions. Therefore, it helps or provides information for management accounting, as well as provides information for financial accounting in the preparation of financial statements. Any questions? All right, let us get to another concept that we need to clarify, or let us say recall, before getting started with chapter number 5, activity-based costing. The measurement, analysis, and classification, which is the process of any cost accounting information system. We said, or some of you said, that the classification is called something called cost assignment. Correct? Therefore, we can summarize the process, or let us say, take a part of this process, which is concerned by two terms: cost accumulation and cost assignment. What do we mean by cost assignment? But of course, we cannot report, we cannot produce output, we cannot produce reports with financial and non-financial data or information without some sort of cost accumulation. Of course, this is something that is given. Therefore, we need to have some sort of recording, some sort of measurement, some sort of cost accumulation in order to analyze and classify this data or this information. Therefore, after the cost accumulation comes something called the cost assignment. Of course, the cost assignment comes within these two processes or processes, the classification and the analysis of this data. What is the meaning of cost assignment? Or what do we mean by this term, cost assignment?
Cost allocation and cost tracing, by tracing indirect cost to cost object and allocated indirect cost to cost object.
Excellent, excellent. Of course, as we said in cost accounting 1, we have two different classifications of cost, direct cost and indirect cost. And we said that in order to know or in order to report the cost of these cost objects, whether they are courses, whether they are products, whether they are services, and so on, we need to assign the costs that has been accumulated before to these different cost objects. And of course, the assignment here is according to the classification of cost. We said in cost accounting 1 that direct costs are traced, while as indirect costs are allocated. Of course, how can we trace? First of all, let us recall, how can we trace direct costs? Who can tell me how or what is the process of tracing, or how can we trace these costs directly to their cost objects? What are the means?
We should firstly know what is the cost object. And
Excellent.
So that we know what is the thing we want to trace the cost for.
Excellent.
The cost for. And I think this is the first.
Excellent. That's excellent. Of course, we said in cost accounting 1, in order to classify costs into direct and indirect, we first of all need to determine. Excellent. We need to determine what is the cost object. After determining the cost object, we can determine or classify costs according to this cost object into direct and indirect. But the question here is, how can we trace, after knowing the cost object, after determining the cost object, after classifying the cost into direct and indirect, now the question here, how can we trace, or what is the means by which we can trace direct costs to different cost objects? We took this in chapter number 4, job costing. We trace them according to source documents. Therefore, we have source documents, and according to these source documents, we can trace exactly the amount, for instance, of materials, the amount of direct labor that has been used, or the amount of resources that has been used by this particular cost object. Who can give us an example of source documents? For materials, we said that for materials, we have something called a materials requisition record. This is an example of source documents, because before any materials, before any transfer of materials from the warehouse to the manufacturing process, there should be a material requisition record that states the quantity, that states the cost, and states which job we need these materials for. Correct? Also, another example is the labor time record. Also, we said that any employee that works on a particular job, for instance, his salary, or let us say his wage, could be directly related to this job. If, for instance, person A or employee A works 10 hours on job number 1, therefore I know that the amount of labor costs paid to this employee for this 10 hours is concerned only with job number 1. Therefore, we can trace it directly to the job according to what? To this source document, the labor time record, of course, which shows us, or which states, who is the employee and how many hours did he work and on what did he work on. Did you remember these records and these source documents? Of course, if you have any problems with these terms, and as you can see, we haven't started with Cost Accounting 2 yet. These terms are all from Cost Accounting 1. We discussed these terms in the first semester. Therefore, you need to refresh your memories if you have any problems in these terms before entering into Cost Accounting 2. This is an important thing to acknowledge. After this, after the tracing of direct costs, we need to allocate indirect costs. Now, of course, the question here, how can we allocate indirect costs?
Direct cost and indirect cost at allocation base, then we can calculate allocation rate based on allocation base and allocated cost among indirect costs.
Excellent. فبالتالي, first of all, we need to determine the allocation base. Second, we need to measure or determine the costs or the cost pool for this allocation base. And as we discussed in Cost Accounting 1, it is not the other way around. We do not determine the costs or the cost pool and then go to determine the allocation base, but quite the opposite. We first determine the allocation base and then we will determine or measure the cost pool. Of course, if I know the allocation base and if I know the cost pool, therefore we can allocate by calculating something called the predetermined or the budgeted allocation rate. How can we calculate the budgeted allocation rate? Who can recall how can we calculate this rate? Budgeted allocation rate equals
divided by allocation base.
Excellent. فبالتالي the budgeted allocation rate equals the budgeted cost pool, and of course, as we said in Cost Accounting 1, when I say the term cost pool, I mean by the cost pool it is indirect, divided by the number of units or number of total units of the allocation base. And we said the allocation base could be the number of labor hours or direct labor hours, could be the number of machine hours, could be even the total amount of costs of direct labor, and so on. Therefore, after calculating, until now we didn't or we have not reached to the allocation of indirect costs. We have determined the indirect cost pool, we have determined also the allocation base, and then by determining these two, we can determine or calculate the budgeted allocation rate. After the calculation of the budgeted allocation rate, we can allocate costs according to the number of units of the allocation base consumed or used by this cost object, and multiplying it, of course, by the budgeted allocation rate. By this, we allocate the indirect costs or the cost pool or this specific cost pool to different cost objects. Correct? Any questions? Of course, by this, we have finished from the terms that we need to recall before starting with chapter number 5. Of course, now let us start with chapter number 5 by stating the following. We said that any cost accounting information system encounters some problems, some difficulties. The question here, are these difficulties concerned with the tracing of direct costs, or is it concerned, or is it because of the allocation of indirect costs? What do you think? Do you think the problems arise from the tracing process, or does it arise from the allocation of indirect costs? What do you think? The allocation of indirect costs. Why is that? It is more difficult. Why is it more difficult?
Need more steps of calculation to reach the final answer.
Type, let us put it this way. Which is more accurate? Tracing or allocation? Why is it more accurate? Because it is more clear, because we are tracing directly. We are following exactly the steps of the resources that has been used up. I can say, of course, if we are talking about direct costs, that this pen, for instance, or this table has used 1, 2, 3, 4, 5, 6, 7 from materials, because I know exactly, according to the source documents, according to the material requisition records, what exactly or what are the materials that has been used up in the production of this product. Therefore, it is highly accurate because it is a physical relationship. We can trace the physical relationship between the resources that has been used up and the cost object. While as in indirect costs, we do not have this clear relationship between the resources that has been used up and the cost object itself. Yani, for instance, the electricity for the different rooms in the university, as we said in Cost Accounting 1, is considered an indirect cost. Of course, if the cost object is the course itself. Why? Because at the end of each month, the university has this electricity bill. Correct? And any accountant would not know exactly which course have used or what is the amount that has been used by each course. Therefore, we need to allocate these costs to the different courses that has been given in semester 1 or in this month. Therefore, we need some sort of allocation, some sort of averaging, some sort of, let us say, a calculation that would allocate, that would divide, that would spread this amount of costs onto the different cost objects, which is in this case the courses. Correct? Therefore, always the problems arise from this point, the allocation of indirect cost. And any inaccuracies in any cost accounting information system comes from this point. Of course, this is a background. As we can see, recall that factory overhead is applied to production in a rational, systematic manner using some type of averaging. As we can see, we are calculating the budgeted allocation rate according to some sort of an averaging technique. We are spreading the indirect cost onto the number of units of the allocation base. Correct? There are a variety of methods to accomplish this goal. What are these methods? Or these methods, of course, has a trade-off. Always we have a trade-off between two things, two important things actually, but there is some sort of trade-off between simplicity and reality. Because as we need more accurate allocation of indirect costs, we need more realistic approaches. But these realistic approaches will make our cost accounting information system more complex. More complex means more expensive. More expensive means maybe less efficient, less cost effective. If we can recall the difference between direct and indirect costs, as we said in Cost Accounting 1, as we defined them in Cost Accounting 1, we said that direct cost and indirect cost both are costs that are related to a specific cost object, and we did not say that one is related and the other is not related. Both, or the direct and indirect costs, are both related to the cost object. But where is the distinction, or how can we distinguish between direct and indirect? Direct costs can be traced in a cost-effective way, while as indirect costs cannot be traced in a cost-effective way. This is the only difference between the two. But both are related to a specific cost object. Therefore, if we need to get out of this problem, the problem of averaging, the problem of inaccuracy, that means we need more complex methods in order to have more realistic results, more accurate results. But this, or these complex methods, would increase our expenses, would increase, or it would be expensive. More expensive, that means it would be, or maybe, less cost effective to perform. While as if we use more simple methods, of course it would be less accurate, less realistic, but at the same time it would be less costly, less expensive. Less expensive means it would be more cost efficient. It would be more cost effective to perform these, or to, let us say, allocate these costs onto the different cost objects. Of course, the use of the allocation is necessary, because we have indeed indirect costs, and we need to spread or allocate or divide these indirect costs to the different cost objects. But the problem here, do we use an accurate, a more complex, or do we use a simple but less accurate method? This is the trade-off that we have been talking about. So what do you think? Do we use a more realistic, a more complex, a more expensive, or do we use a less expensive, a less accurate, a less realistic, but more simple method? Yani, for instance, we took in cost accounting 1 that some organizations would allocate all indirect costs. That means they have only one cost pool and would allocate these costs by using only one allocation base, for instance, the machine hours, or for instance, the direct labor hours. Therefore, as we can see here, this method or this way of allocating or spreading costs is less accurate. It is simple, less expensive, but it is less accurate. While as we also saw that some organizations would have more than one cost pool. For instance, 2 cost pools or 3 cost pools with 3 different allocation bases. As we said, that each cost pool needs to have its own allocation base. Therefore, this is a more complex approach, more expensive approach, and so on. So how can I differentiate, or how can I make a decision on which method to use? And we said it in cost accounting 1. We said that always in making a decision, we need to have or to weigh 2 things. We need to weigh costs and benefits. We need to use the cost-benefit analysis, right? Therefore, I cannot say that more accurate is better. I cannot say that less accurate or more simple is better. We need to weigh 2 things, the benefits and the costs, of course, of the first method and the second method. And of course, if we have the ability, if we have the technology in order to use more complex methods, therefore the cost of using these methods would be less. Therefore, it would be more cost effective to use more complex, and so on. Therefore, at the end, we need, in order to make this decision, in order to make this trade-off, we need to weigh the benefits and the cost of each method alone. Of course, some of the factors that is considered with this cost-benefit analysis is how many products are we producing, and also is concerned with the percentage of the indirect costs from the total costs. That means that if we are, let us say, producing 2 products and only 2 products, at that case, or in this case, we could use more simpler cost allocation methods. Why? Because at the end, we are only producing 2 products, and therefore all the costs of manufacturing or manufacturing costs are related to either product A and product B, nothing else. But if the number of products increases, let us say if we have 10 products or 20 products or 50 products as some of the multinational companies and so on, Therefore, in this case, it would be more important for us in order to have a more complex, a more realistic, a more accurate method of allocating costs in order to reach to a more accurate cost results or more accurate reports on these costs of these cost objects. Therefore, the first thing that we need to consider in the cost-benefit analysis are the number of products produced. The second thing that we need to consider in the cost-benefit analysis is the percentage of costs of indirect costs of total costs. Is this percentage small? That means, if this percentage is small, that means if we are inaccurate in our estimations, if we are inaccurate in our, let us say, allocation or spreading of these costs, it would not have a large impact on our reports. Correct? It would not have a large impact on our decision-making process. Therefore, in that case, if the percentage is small, we can afford to be more inaccurate. On the other hand, if this percentage is high, let us say 50% or 60% of total costs, in that case, any inaccuracies, any problems in allocating these costs would have a large impact, would have a large effect on our decision-making process. It also would have a large impact upon our reports that are presented, of course, financial reports, as we said, as well as the reports that are represented or presented to the managers for internal use. Therefore, we need to consider in this cost-benefit analysis these two criterions in order to make the right decision whether to use more complex or more simpler cost allocation methods. As we can see here, historically, firms produced a limited variety of goods while their indirect costs were relatively small. Of course, before 20 years or 30 years, before globalization, before the rapid use of technology in the manufacturing process, we used to have only 1, 2, 3 products maximum, or 3 products that are produced by a manufacturing company or by a company. Or let us say for a service company they had only 3 services or 4 services to give. As well as, because the use of technology was not as rapid as these days, their indirect costs were relatively small before 10 years and 20 years and so on. At that time, the use of simpler, the use of, let us say, more easy allocation methods was the right thing to do, which is most common at that time. Why? Because in the cost-benefit analysis, they took into consideration that they have only a limited variety of goods and services. The number of products produced or services produced are relatively small. Therefore, if they had any inaccuracies, these inaccuracies would be limited to a small number of products. The second thing that the lower use of technology had an effect on total costs in that indirect costs were relatively small in the organization. Therefore, any inaccuracy that would occur because of this averaging method that we talked about would have a small impact on our results, would have a small impact on the decision-making process. Therefore, in this case, the benefit of using simpler methods was higher than the benefits of using more complicated or more complex methods of allocation. Allocating overhead costs was simple. By using broad averages to allocate costs uniformly, regardless of how they are actually incurred. For instance, we could say that the electricity bill for the university can be spread, can be allocated by the number of rooms, let us say. The accounting department uses 10 rooms and would be allocated according to this number of rooms. The engineering department, for instance, or the management department uses 12 rooms, for instance. Therefore, they would be held accountable for only the electricity for these 12 rooms, and so on. This method, if we are using the number of rooms as the allocation base, is not accurate. It is not accurate at all. Why? Because as you can see, not each room uses electricity as the other room. For instance, in this room, we have cameras, we have mics, we have LCD, computers, and so on. We have more lighting here, and so on. But other rooms, for instance, computer labs or scientific labs, would have more gadgets, would have more technology that uses more electricity. And also, we have rooms that only the electricity that is used within these rooms are the lights. Therefore, how can we allocate the costs in the same manner between these different rooms? It is inaccurate, but it is simpler. Okay? And if we are talking about the university 50 or let us say 20 years ago, 20 years ago, the university or each room in the university only had lighting. Only the light was the source that uses up electricity. Therefore, the using of this simple method of allocating costs according to the number of rooms that we have is a lot, or let us say it is much easier, and it is somewhat accurate because all rooms are identical. We do not have rooms that use up more electricity than other rooms. While as nowadays, because of the use of technology, as you can see, this allocation is becoming less and less accurate. Therefore, we need to use more complex methods of allocation in order to allocate costs more accurately. Of course, the end results, because of we are taking into consideration that all rooms use up the same resources, while in fact they do not use up the same resources. Therefore, we have a problem here. We have this gap. This gap is either an overcosting or undercosting of this, or by using this allocation. Of course, inshallah, in the next time we are going to talk about what is the definition of overcosting, what is the definition of undercosting, but please refresh your memory on some of the concepts that we have talked about here, because as you can tell, Cost Accounting 2 is highly related to the concepts that we have took in Cost Accounting 1. therefore you need to refresh and recall some of the terms. And we are going to, and by this we have finished the lecture for today.